This interview is with Sean Sanders, the founder and CEO of Revix. Revix allows you to invest in a bundle of cryptocurrencies to make it easier to invest small amounts into bundles. So they're creating these bundles. We talked about why he's starting this business, what he sees in it. It's a beautiful design and it's a great concept. Sean is based down in Cape Town, South Africa, with offices in the UK. We talked about the future trajectory of Cape Town and South Africa more broadly, the potential to improve the country, to make it a more economically developed and prosperous nation. We talked about generally the concept of bundling and the trajectory of crypto and its integration with traditional finance. Fascinating conversation, and I hope you enjoy. Here is Sean Sanders. All right, Sean, I am excited to chat with you. I was doing a little bit of homework on your background, and similar to me, you started a bunch of different companies involved in different things over the years. Let's just start with where you are. So with Revix, how do you define the ambition of the project and where you would like to take things?
Hey, Mike. Thanks very much for having me on the podcast. So where Revix is right now, we're in the crypto space and we offer essentially cryptocurrency bundles. So if you want to get diversified exposure to the crypto space, very much like buying into, say, the S&P 500, but in the crypto world, we've got a bunch of bundles that can help you do that. So it feels very much like index investing, and it's just a nice, easy way to get diversified exposure to the crypto space. If we look forward, we're looking at introducing other alternative investments onto the Revix platform. So this is where you can be investing in, say, venture capital, real estate, private equity, collectibles. So those are coming onto the platform, as well as thematic and sustainability focused investments. So if you're wanting to invest in, let's say, AI, medical cannabis, biotech, 5G technology, perhaps even, something like space exploration, and you're kind of scratching your head going, well, how do I actually invest in these areas? Well, we're just going to make it really easy for you to get exposure to those different categories. So we kind of putting crypto into the alternatives bucket, and ultimately Revix becomes almost sort of an ARK like investing platform. Like Kathy Wood, I suppose, has successfully built ARK Investments, and we sort of want to be focusing on sort of more of a platform play of what she's built, with a grander future sort of ambition of going into the goals-based investing arena. So we want our customers to be very outcomes focused, to say, hey, listen, I want to buy a home, or I want to go on a dream vacation, and I want to be able to use the investments that are on the Revix platform, and that'll include savings products and a whole bunch of other things, so that I can actually achieve these goals and then reward customers along this journey. So that's really our long-term vision and ambition. We want to become the world's leading goals-based investment platform. And there's a couple of big milestones that we want to tick off along the way.
Interesting. So the two themes here is like the bundleization of investments and then goals. Goals strikes me as more unusual or just counterintuitive on why that would be something you'd focus on. Is that something you realize people calibrate their investments towards? Is that goals, as opposed to just accumulating wealth, is more important to some people?
Yeah, so it's interesting, right? A lot of retail investors in particular are looking at building wealth, right? They want to have a certain amount of wealth, but they want to then use that wealth to either buy a home, buy a car, buy a watch, do something with it. Maybe have a rainy day fund, or you have a, sort of education fund or something along those lines. But if you land up, we've been picking this up with some of our user studies so far, if you land up sort of focusing on a particular goal, all of a sudden your sort of relationship with risk, it completely changes. You're not as risky with the investments that you take, at least from what we've seen so far, if you know that this money has to be ready in, say, 6 or 12 months time. So we're looking at bringing that onto the platform with exciting investments, right? So if you can actually take, let's say, Bitcoin and, maybe a thematic ETF, and put those two into, say, your own build a bundle product, and that happens to be your goal that you're working towards, all you've really done is you put the outcome of what you're working towards front and center, rather than just, hey, I want to make some money through a limit order. I want to achieve something, and I'm going to use these two products that I could potentially trade out of in order to actually achieve that.
And do you suspect that this is more motivating psychologically to people because they have a real world dopamine release associated with the accumulation of wealth, as opposed to just, digital numbers somewhere? They think, oh, I'm going to be sitting on the beach once I make $1,500 in this investment. Is that what you suspect is going on? Why it's more motivating for human beings and people?
Yeah, I think that's exactly why. I think people are outcomes focused. I think people do want to have goals, and financial goals are really important. And if you put those front and center, all of a sudden it's, hey, I need to actually achieve this. I need to contribute a set amount of money every single month. So you've got more money coming on the platform. That's better for both the user and naturally for Revix. It also means that customers taking sort of their risk profile into account. Like for a rainy day fund, you don't want to be investing in, say, Bitcoin or any other sort of highly risky product. You'd rather have a savings fund for that. If you're going into something that's a lot more sort of discretionary in nature, then all of a sudden maybe having discretionary investments such as Bitcoin in there can actually be to your advantage. So it's not to say we're not taking a total portfolio view. This is not getting into the finance world really, but you say essentially saying, hey, listen, think about the outcome here. And we do think as well, because a big element of what we're looking at building and integrating is this gamification component. And if you can find out what people are working towards, you can sort of gently nudge them to become better investors over time. And our sort of mission as Revix is to enable everyday people to become their own wealth manager and to manage their own money. And I think that's very much aligned with sort of that crypto mantra. And I think, if you deal with independent financial advisors or just wealth managers in general, I mean, the value that they add relative to the fees that they take, it's not always there. And I think that's really the big narrative that we're playing into.
Yeah. I think I heard the stat that I think Warren Buffett made $1 million bet one time famously saying that if you could manage a bundle of stocks that outperform the market, I'll give you $1 million. And I forget the name of the guy who took him up on it, but he couldn't do it. How do you orchestrate, or what is the architecture of the investment bundles? Is it like you show a list of the crypto companies that you've identified as being correlated in some way, and then people can just choose to purchase on your platform, and then you hold custody, or are there different custody options and technical ways that it can work?
Yeah, so I guess because we sort of target newer or earlier stage investors, if I can call it that. So not somebody that is going to be self-custodying. So if somebody comes to Revix right now and you want to buy, let's say, our top 10 bundle, which is our flagship product, you're getting equally weighted exposure to the top 10 largest cryptocurrencies. And that bundle then will be rebalanced every single month. And that'll be a completely automated process. So it's very similar to sort of just buying the S&P 500, but in the crypto space. Now, what we actually do in the background is we have a process called direct indexing. So now if you get into my background, I come from the startup space, but I also was working in investment banking for a while. And I worked for a family office in the UK. Very long story short, but that family office wanted to deploy a lot of money into an index fund. But they had a really big position in one of the companies that was already in that index fund. So Credit Suisse essentially spoke to us and said, hey guys, we can build this index for you where you'll actually own the underlying stocks within that index in their requisite proportions. So we were like, wow, this is a great idea. Let's go ahead and do this. And they used essentially their in-house technology, which was known as direct indexing, to build this index for us. Now that was a deployment of a couple $100 million. Everyday people can't go and buy fractions of all these different shares in the market, right? So if you're looking at investing, say $50, well, how do you get exposure to, say 10 different stocks? You'd have to have fractionalized ownership of each of those stocks. And I think in the US, I mean, that market is the most developed and you're kind of spoiled for choice, I suppose, with platforms and also fractionalized access to a lot of stocks. If you're looking in other markets, I mean, fractionalization is almost nowhere. In South Africa, which is where I'm from, and you can hear my accent, fractionalization of shares is just literally, it's just started. Very few platforms are able to offer it. And there's just not a big market for that just yet. So our direct indexing approach is ultimately looking at fractionalizing shares. So that's the first problem that you're looking to solve. And then giving customers direct access to each of the underlying either shares or cryptocurrencies within a particular bundle. So you actually remove the requirement to have a fund. That's sort of fund vehicle when buying a basket of any sorts of assets.
Hey, would you think of them closer to an ETF? I think of an exchange traded fund as a algorithmically determined group of stocks or equities. Maybe crypto is in there as well, but there's some correlation between what they have together. So you purchase that, but there's no fund manager. There's no human being making those choices.
That's exactly it. So I think the difference really between a direct indexing approach where you actually buy the underlying and an ETF is that you get a little bit of tracking risk, depending on the ETF, but you get a little bit of tracking risk when you buy into an ETF, which means that the ETF may not move exactly the same as the underlying assets. The other thing is that an ETF will generally rebalance, say, semi-annually or maybe annually, which means that you could be holding assets that have been, I don't know, they've either depreciated significantly or appreciated in value significantly. And maybe you want to either, sell out of a loser or take profits on a winner. And you're currently at the mercy of that fund structure. Now with a bundle, and this is ultimately what we're working towards, and it feeds into sort of that goal structure where you can build your own goal, is that all of a sudden you can configure exactly which assets are in this bundle at which point in time. So you sort of have access to a ETF-like product, but you've just got more control over how it all works.
Does that not defeat the point of the ETF? I think of it like if you can go and pick and choose your own, is that the same as, how would that be different than if I were to just go and buy Bitcoin or buy Ethereum or buy any other crypto?
I think the big difference really is that it's just the efficiency, right? So you can actually go and buy each of the S&P 500 stocks. If you went to a fractionalization platform, well, you could buy every single one of them, right? And then rebalance them every quarter or every single month. But it is a bit of admin, right? So if you're looking at some of the thematic ETFs, right, you've got 70 basis points a year, so 0.7% a year in management fees. Maybe that comes down a little bit. It's 50 basis points a year, 0.5%. That's still a pretty hefty fee that you're paying on an annualized basis. So with a direct indexing approach, there's no requirement for that expense ratio or that fund fee. You can essentially keep that in your pocket.
Interesting. And then, so say $50 for, practically speaking, if you wanted to go buy, a equal weighting of the top 10 cryptos out there and you had $50 to spend, it's pretty hard to do that because you accumulate, number one, it takes a lot of time. You'd have to actually go and make all those trades. And then you have the trading fees from each of those. Then you have to manage them all together. How are you managing this on the back end? Is it just, you have a lot of crypto, you're purchasing it, and then you keep your database up to date with the allocation of ownership, or how is that structured?
So it'll depend on, I guess, the size of the customer. I mean, at times you'll have a customer that's a couple $1 million that wants to be executed, and that customer is going to be treated very differently. We'll segregate their account. So I guess when you're looking at crypto custody in general, you've got segregated accounts versus omnibus accounts. So we custody with Fireblocks. We custody actually with a few different providers. But when we look at custody, I mean, you get your own wallet as a customer at Revix, and you can make deposits to that wallet, and you can obviously make various trades. But in the back end system, I mean, we ultimately are sort of collating everything. So everything gets sort of commingled together, and then assets are sort of balanced off on that, through that way.
And what is the current, if you're starting a crypto company or a company that wants to offer some value add on top of the basic, what does the custody market look like? When you're going out there, custody is obviously a huge deal in crypto. And just the allocation of the crypto underneath the hood, like Celsius, I'm sure had to have a ripple effect on your business and just the whole market in general, as they froze like billions of people's, equivalent dollars in crypto, like a lot. Is it, how do you sort of describe what the landscape looks like and how it is today, where it's going, what your thoughts are on custody?
Oh my word. Yeah, the custody space has grown so much. I mean, I think back 6 years ago, and I mean, custody was expensive. I mean, you're looking at hundreds of basis points a year. I think at one point in time, actually, when we first looked at BitGo, and I mean, this must have been 6 years ago, it was almost 450 basis points a year. So 4.5% to custody your assets on an annualized basis. And there was no insurance options, no real insurance options. And since then, you've had Copper.io, they've emerged. You've had Fireblocks, you've had, Bitpanda's recently acquired a player. There's a lot of custody partners. But some of the bigger players, the likes of Fireblocks, I mean, they've really established themselves. They've built a really good service offering. Fireblocks, interestingly, is actually a lot more of a SaaS play. So they provide the infrastructure so that you can custody cryptocurrency at the end of the day. They actually are not a custodian. Copper, on the other hand, is a custodian. BitGo is a custodian. So there's an interesting sort of play there. But I think the space has certainly matured. I mean, you can get insurance now at a reasonable cost. I think this market will become far more efficient. Prices will end up going down. So the infrastructure has grown tremendously. And I mean, we got shown a couple sort of neat integrations with Fireblocks recently with various trading providers. And I mean, the technology is just at the verge of what you're getting in TradFi, right? I mean, traditional finance and algorithmic trading and all the rest, they rely on milliseconds for anything to happen. And you're kind of seeing that now in the crypto space. So it's fantastic to see how far it's come. It's only a matter of time where, this gets that same sort of level. And I mean, the fact that this has happened over 4 to 6 years, it's remarkable. It's honestly the rate of development in the custody space is something, I've never seen something like that before.
And is it specifically the pricing decrease that's exciting? Or is there,
I think it's
yeah.
Oh, sorry. I think it's the functionality, to be honest with you. It's the fact that back 4 years ago, you had very few platforms that were able to custody the top 10 cryptocurrencies. It was sort of really select, and you have to sort of add cryptocurrencies on a quarterly basis. Now it's sort of, top 150, 200 cryptocurrencies. It's the integrations with chain analysis or Elliptic or some of the analytics tools that exist out there as well. I mean, the space it's just crazy how fast the developments occurred.
That's exciting. And so you guys have raised money. Can you talk about why you raised, when you raised, how much you raised, and a little bit of that story?
Yeah, sure. So in total, we've raised $7 million. We've raised that in 2 rounds. We did our initial round a couple of years ago. We did that with a Johannesburg Stock Exchange listed specialty investment group called Sabvest. They predominantly invested in industrial businesses. And then somehow we, came out on their good side. They decided to invest in us, and they've backed us from the start. Since then, we've raised from a Swiss-based VC called CVVC, a whole bunch of angel investors. And I mean, for us, software development's expensive. We are building a platform that would be comparable in many ways to the likes of Coinbase, focusing in a very different area, of course. A different sort of investor comes along to us versus a Coinbase. But I mean, that's what we're aiming to build, right? And we want to be profitable by this time next year. So, ideally late 2023, we want to be able to say, hey guys, we are profitable. It's not necessarily just burn money at all costs forever. And I think for us, we have 46 employees, most of which are based in Cape Town, South Africa. Some are based in the UK. For us, it's an opportunity now to expand internationally. We've been heavily focused on the South African market. We did once upon a time operate in Europe and in the UK. We decided to sort of double down and establish ourselves as one of the leading players in South Africa, which we've done now. And the UAE is sort of the next opportunity for us to move into. So that's what we're doing now.
The UAE is next.
That it's next, yeah.
Talk to me a little bit about South Africa. I understand it's a unique market in the sense that there's a huge consolidation of economic activity around Cape Town. What are the other unique factors of operating in South Africa, like from a regulatory standpoint or demographic standpoint, whatever else comes to mind?
So I think this is the thing that, a lot of my American friends and British friends as well, they kind of just like, what? Did you just really say that? So firstly, we have the Rand as a local currency. So you'll see the ticker ZAR, Z-A-R, or Z, I guess, in the US. And the Rand is a cryptocurrency, quite honestly. It is super volatile, right? I mean, to give you context, it is not odd to see a 4% move over a week. It is not odd to see a 6% move. That's just the nature of the beast. There's an investment strategy in South Africa, and it's actually exactly the same. And I've worked in Turkey. I've worked quite a lot in the South American markets as well. The local currencies, they depreciate, right? Every year relative to the dollar. I mean, maybe one year they pop up a little bit, but there's structural depreciation. There's higher inflation, which means that there's that structural depreciation taking place. So people are kind of used to volatility, right? Our average inflation rate over the last decade has been 5%. That is where it's at. And you've got a very different sort of market dynamic because of that. I mean, if you sort of look at Bitcoin as an example, or you look at stable coins, all of a sudden, my word, you can enter a dollar-based asset, a stable coin, and you're now not exposed to this really volatile currency, which has a huge impact on the economy from, unknown pricing, right? You're having to enter sort of futures contracts for oil that you're importing and a whole bunch of other goods. So there's a lot of risk that's sort of baked into the market. I think that's the first thing that's interesting to note. So firstly, you've got an entire, and this isn't just really South Africa, this is the entire African continent and pretty much every other emerging market, with maybe the exception of China, where you've got a local currency that is just really volatile, where you want to be in another asset and you would crave to be in US dollars. Now, there's a limitation, and South Africa is one of the few countries in the world that has this very archaic sort of system in place, but we have foreign exchange controls, which means that the average South African, not the average South African, sorry, every South African that is an individual can only move R1 million out of South Africa. So that's about $63,000 on an annualized basis. If you want to move more money out of South Africa than that, you would have to apply to the South African Reserve Bank in order to actually send that money. And that's a tedious process. It takes months to actually get that done. Now, you bring about crypto and all of a sudden, well, moving money out of South Africa is really easy. So that's been one area. And I think you saw that in China actually quite a lot as well. And in Nigeria, certainly a lot over the last few years. But that's one big sort of development where you have seen a lot of people and billions of dollars move into the crypto space. So people are actually able to move their money out of South Africa. I think another thing that's quite interesting is that the crypto market in South Africa, I mean, it's a big market. Certainly not comparable, say, to the US, but nevertheless, in the African market, it's definitely one of the top 2 or 3 across the continent. And
yeah, 60 million people. Yeah,
yeah,
a lot.
It's a lot of people. I mean, nowhere near sort of the spending power that you would have in the US. But I mean, nevertheless, a lot of people that also are sort of just craving investments that aren't rand based. So they want dollar-based investments, and crypto is actually viewed like that. But that actually results, and this is sort of looking at the exchange controls that are there, this actually results in cryptocurrencies having an average price premium of about 1.5% to 2% at all times. So if you had to actually move any cryptocurrency into South Africa, and let's say you bought this on Coinbase or you bought this on some international exchange, you'd be able to sell it at a 2% premium or 1.5% premium, depending on the market at any point in time. So that's actually led to this huge growth of an arbitrage industry in South Africa, where there's companies making a fair amount of money, literally on behalf of various citizens, moving money out of South Africa and then just moving it back in to buy Bitcoin and essentially selling on local exchanges. So yeah, super interesting dynamics taking place in an interesting market.
Interesting. And I would imagine that the purpose of the government regulatory rule on the limit of people moving money out of the country is what? Is it deflationary concern, or what do you think the motivation with the regulation is? And is this a short-term like gap in the market that's going to be closed up, or how do you sort of paint the picture of what's going on?
Oh, no, we're actively engaging with the regulators, and there's definitely no way I think it's being closed up. It's to prevent capital from leaving the country.
Right.
Ultimately, when you go through periods of some surprise, right, or some big shock in the economy, the first thing people do is they flee, right? I mean, during the start of COVID, I mean, the rand is currently around about 15.8 to the dollar. At the start of COVID, they went up to 19, right? And at that point in time, it's just like sort of when people are panic selling out of the cryptocurrency, right? People are panic selling out of the rand. They just want to buy dollars. Yeah. And at that point in time, I think the Reserve Bank really battles to maintain any sort of peg. And, you know, you've seen this in Turkey, you've seen it in Peru, you've seen it in Argentina. I mean, currencies just go through that hyperinflationary period. There's mass depreciation. And I think the Reserve Bank just desperately wants to avoid that. So that's why exchange controls are there ready.
And what do you think of that? Is that a useful tactic? Is that an outdated and like antiquated tactic? Is there a better tactic I mean, I would imagine you'd agree with, tell me what you think should be done. And if there's like gaping opportunities that the Fed is not over, or the central bank is not looking at.
Oh my word. It is so archaic, and it is the worst thing that could ever have been implemented.
Yeah.
It makes doing business in South Africa terrible. I mean, we're a UK based company, so it's easy for us to get an international investment, but you can imagine now you're a US investor. Let's just say Revix was a South African company. You wanted to invest in Revix. Cool. That's easy to bring money into South Africa. No problem. Now, all of a sudden we want to pay you, but no, that's going to take 3 to 6 months because we have to do applications with the Reserve Bank simply because of some rule that was put in place. So, I mean, there's been so many battles where you've had either just very wealthy individuals take the constitutional court, essentially challenge the constitution and the constitutional court around this sort of exchange control regime that's in place, and no one's been able to win just yet. So it impedes business. It's incredibly frustrating to work around, but it is sort of one of the rules in the game at the moment, at least when you're dealing with the South African market. I think that's a nuance that you actually see across the African continent. Nigeria is very similar. If I'm not mistaken, China's got I don't want to lie, I think it's about a $40,000 a year limit. So it's actually lower than South Africa in terms of the amount of money that you can take offshore without applying to the central bank over there.
And do you think South Africa would be better off if they completely eliminated that rule?
Without a doubt.
Yeah.
Without a doubt.
It doesn't really protect them from people fleeing. Is there any positive externality? I mean, I would imagine if people literally can't take their money elsewhere, then it would limit panic selling or fleeing of the country. Is that in any way a good thing?
I mean, potentially, I suppose. I guess if you don't have, say, the balance sheet as the central bank to actually be able to defend the currency when you enter market stress like that, perhaps I think that could be a good time. But at the same time, I mean, it impedes a lot of foreign direct investment, and that's what you really need in emerging markets, right, to create jobs. So I personally think it's far more negative than positive.
Yeah. I mean, it's hard to see otherwise, but who knows, whoever put that in place, maybe they're more wise than we are. Do you think that is there currently a limit on Bitcoin purchasing? Like, can you go and purchase $1 million worth of Bitcoin in South Africa? And while you technically haven't moved it outside the country, you own it. And, you know, crypto is universal. It's not tied down to any country specifically. So are people getting around this rule effectively using crypto?
They definitely are.
Yeah.
Up until this point in time, they have been. The South African Reserve Bank, though, has spoken to us about, and not just Revix, but also the South African crypto industry, about implementing some sort of an exchange control structure that would mean that if somebody made a deposit to a crypto platform and bought a cryptocurrency, that could be deemed an exportation of capital. So that would be essentially like sending money to somebody in the US. Now, whether or not that gets implemented as an actual law, that's something we need to wait and see. But that is something that's been floated about. So I guess over the next 6 to 12 months, we'll see whether or not that gets implemented. We've been on the side to say, hey, listen, if you do that, you're going to really impede innovation and growth within the country. It's a complicated subject because we live in a world where you've got physical borders, right? And then in crypto land and the digital world, well, you know, and this is sort of the conundrum that gets created here. If I land up remembering a private key and I climb on a plane and I travel somewhere and I land up, you know, using my crypto from the private key, I mean, is that an exportation of capital? So they can't answer that. The locality of crypto is actually a fascinating subject to dive into, especially when you start looking at how value is moved around. It's the same as, you know, if you buy a luxury watch and you put it on your wrist, you got it on a plane, you leave South Africa. Is that an exportation of that watch? Well, I mean, there's a whole bunch of sort of rules to determine whether or not it has been, but those rules haven't yet been written for crypto. So there's just a big gray area at the moment that needs to be addressed.
Yeah, it would seem to me that literally speaking, it's the location of the private key. And there could be multiple locations. You know, you can write it down and memorize it, but then it's just, it literally is located in both places. Or it has the optionality to be located. I guess once the key is engaged, that's the actual definition of where it's being used from, which it seems like a pretty reasonable definition to me. But I think it also would require the government to say, hey, we need it makes the desire to control the location of currency like futile. So I think if you recognize that when you get on a plane and you memorize your passcode and you go somewhere, like, yeah, that crypto is leaving the country for sure. But also maybe that's okay. Maybe it's like a catalyst to say, because the alternative seems way worse. And I'm curious, how do you go about influencing government policy? I think it's interesting in South Africa because it's a smaller place. Like maybe you can have more of an influence. You get together with other founders or other people in finance and you have you structured any choreographed messaging or any way that you find is most effective in getting the attention of governing bodies?
Yes, I think in South Africa, I mean, I've got to actually applaud the regulators. They've spoken with us directly. I mean, I literally was on the call with them earlier this week. We've engaged with other industry players in South Africa, so the major exchanges. We've worked together on at least forming our positions around, okay, well, these regulations that you proposed, they look good. These don't. Let's, come to some sort of an understanding about how exactly we could build this. I mean, in South Africa, you've got crazy unemployment, right? You've literally got youth unemployment that's about 55%. So that's
Wow.
people under the age of 26. People over the age of 26 is roughly around 36% unemployment countrywide. I mean, people need jobs. Like you really desperately need jobs in South Africa. But policy gets in the way time and time and time again. It doesn't matter if you're looking at sort of mining or if you're looking at, and I'm not talking crypto mining, I'm talking traditional mining. It doesn't matter if you're looking at that or you're looking at the crypto industry. Regulators are just so far behind what, I guess, what you're seeing in Europe or what you're seeing in Switzerland, I suppose even some states in the US. So like innovation doesn't happen. And that means that you've got a lot of brain drain that happens. A lot of people end up going to first world countries. And then you land up also having just a lot of companies that just go, I'm not dealing with this. There's just too much uncertainty. That uncertainty means I can't raise capital. It means it's a hot operating environment to work in. Hell, I'm going to Europe. I'm going to the US. And we've seen that happen just loads of times. But having said that, I mean, we are actively engaging with the regulator and they've been very forthcoming, which is great to see.
Yeah. Do you find that they generally recognize that that is true, that the regulators are, they're a hindrance, not a enabler? Or is this still kind of a cloud of illusion of, hey, we need these policies, or there's some sort of political reason to keep them in place for some odd reason?
It is very much that we are the regulators. We are here to protect people, and that's our job. It's like this nanny state. I've actually seen it far worse, I suppose, in the UK, where the regulators will go as far. And I mean, it's actually starting to happen, I suppose, more and more in the US as well. But where the regulators will go as far as to say, like, listen, you cannot include, and this is happening currently in South Africa, but you cannot include cryptocurrencies in retirement portfolios. And that's like, hey, listen, I'm a sophisticated investor, right? Like I spent my first 7 years of my working career working in finance, managing portfolios for people. Like, how can you tell me not to put a product that I'd like to put into my personal portfolio for retirement? So that's just one of the things that sort of come out. And in the UK, I mean, it's even stricter, right? There's no crypto derivative trading whatsoever. So the government literally put a complete ban on crypto derivatives, which also means you completely hinder innovation there, because what do you do if you're a crypto miner and you positioned it in that region, whether you're staking and, you know, earning crypto through that, or actually mining the more traditional sort of way? You can't take out a short position and sort of hedge yourself. So you move to a new jurisdiction. There's like silly things that are happening at the moment where you kind of just scratch your head and go like, but why? Why have you implemented this?
Yeah, it's baffling to me. It's frankly like, it's funny because I'll have this conversation with many different founders and we kind of arrive at the same conclusion, which is that there are just some policies that are put into place that seem to benefit no one. And I mean, genuinely, honestly looking at it, it's almost a mystery. It's like, well, is the politician putting this in place for the perception of the mainstream person that they're doing something, and so they can include that on the bullet point list of what they did while they were in office? Like, is that ultimately what it is? And then all the sophisticated folks who are in the space, working in the space and participating in the space, know that this is kind of a stupid thing, but there's like a lack of power that they have collectively or individually to, you know, change. Ultimately, right, it comes down to what most people think is true. And because most people participate in general elections and push the politicians forward. And it still seems like such a struggle to find the right rules, right? It's like, you would think that there'd be more recognition of like, okay, this country does it this way and it seems to be working, like, let's move in that direction. I try to make sense of it. I don't know. I feel like I don't quite have a good grip on what the pathway is forward, right?
Yeah, no, and I completely agree with you. I think humans are terrible. I mean, taking a big step back, we're kind of terrible for defining what exactly we're trying to optimize for. So if we're trying to optimize for protecting a consumer, a retail investor, then cool, implement protections. I mean, all I've seen with most of the jurisdictions we've engaged with, I mean, we've been in Switzerland, we've been in Germany, we've been in the UK, obviously in South Africa as well, now more recently the Middle East. The regulators care the most about money laundering and KYC. And cool, like that's what you are obviously optimizing for. That's fantastic. And there are now processes in place for most crypto platforms, any reputable platform where you'll have to KYC your customers and, you know, do transaction monitoring and all the rest. But from there, it just seems like everybody seems to go in different directions. It's just absolutely fascinating to see regulators sort of overstepping their bounds, I think, more often than not, and just regulating for the sake of regulating. It was almost like the start of COVID, I suppose, where there was just pressure to do something, right? Whether or not masks actually were good. I mean, I honestly don't know. And frankly, I don't really care. But the thing is that you had to implement policy and be seen to be doing something. So it's like, hey, wear a mask. You have to wear a mask. And that was something that was implemented across the UK, across South Africa, and people did it. And the politicians were seen as doing something. And even if it wasn't like this massive box that ticked and saved millions of lives, or maybe it did, I don't know. But just as that example, I think that's the same thing in the crypto space. It's like, we need regulations. Cool. What are you doing? Okay, you're doing things. That's great. Like no one's losing their jobs. And it just seems like that's what people are doing.
Yeah. I totally agree. I almost wonder if there's ways that you can like give them something to do, but it's not actually create regulations. It's like write up policies or write up suggestions of what you see in the market, or I don't know. It certainly feels like a remix or some sort of systemic improvement is necessary, but maybe that's also fine too. Maybe it's like the ideal pathway is slow and it's grueling. And through that grueling process, is where you come to the happy balance. Like there's certainly a point for regulation. There's different regulation required in different markets based on the conditions and demographics and challenges, opportunities there. And I could see absolutely mistakes happening by moving too quickly, like opening the floodgates too fast. I don't know. I think pros and cons, but certainly the extremes are where people suffer. So just opening up a little bit more, what are other things that you feel through your journey you've learned or feel strongly about managing crypto? You've integrated with obviously the technology providers on the back end to manage the crypto. You market to the crypto community. You deal with regulators in the two countries you operate, planning the next area. Do you feel like there's things where you're like, oh my God, this is something I want to explore or get out to the world? Ways you spend your time?
Oh, every day. No, I think I've come across maybe 5 or 6 business ideas over the last 6 or 7 months where I'm like, oh, it would be so nice to be able to kind of pursue that. One was in sort of the messaging space, another was in sort of the fitness space. And obviously, I mean, I'm focused on Revix. Investors are backing me, my team's backing me, so you don't deviate. But I definitely, it's like a good itch. It's not an itch to like move away from the project I'm working on, but I think it's that sort of mindset of always wanting to experiment and go down new paths and tinker with things. I'm also just love working with smart people. And I often feel like just the dumbest guy in the room at Revix. And that's sort of one of the things I've said to a lot of investors about, like, this is why this company's kick ass. Like, I don't think I'm a dumb guy, but the people that I work with are just super smart and we're going places. And pretty much that's the sales pitch right there. I think over the last few years, one of the biggest things that I've really, suppose, sort of had to learn, and it's been an interesting sort of journey as well, is just this gratitude and understanding and self-awareness, really. I think being a founder, self-awareness is like the superpower that you have, just about working in a team and just realizing, hey, listen, you can work 12 hours a day. You can work 18 hours a day, every single day. That's nothing compared to getting 3 people to work really intelligently. So it's being grateful, making sure that, you're very expressive and gratuitous with your team, like, thanking them for the work that they do, but then also just making sure that they're going in the right direction. So moving from being just a manager to actually being a manager of managers has been a big change in my career and something that I've loved doing over the last several years now. I mean, Revix is going on 4 years old. So that's sort of been the biggest lessons. And on the self-awareness side of things, I mean, that extends to every part of life. Whether you're leading a team, whether you are in a relationship, whether you're going for a run, I think being able to either listen to your body or listen to your mind and really kind of just be aware of what you are thinking. I think that's quite a superpower. I mean, it's something I'm trying to hone in more on.
Yeah. A lot of times, myself included, there's like, you work on so many different things. Like I saw the list of things that you have listed on your LinkedIn is like 30 things long. And each one of those requires a lot of attention. And so just moving between those, there's like, it's almost like the jet stream or like a wave. Like there's some after effects where you're still actually processing the last task. So if you're moving from like this thing to this thing to this thing to this thing, which founders have a tendency to do more so than people who are like specifically focused on a lane, then your mind can get crazy. Like you can just have so many things in your head that it becomes difficult to make high level decisions. And yeah, so being thoughtful about like what time of day does my mind work best for long-term visionary type exercises versus like finance versus like HR and managing and recruiting and hiring people. Yeah,
exactly that. Yeah. And I think the other interesting thing is, I mean, I've developed sort of an ADHD, even when I speak, funny enough now, I'll end up getting sort of muddled up over my words because of like thinking about different things. And I don't know if it's my mouth's not keeping up with my brain, but there's just this weirdness about that. And it's actually been as well sort of a superpower since starting Revix, because you do, and Mike, you've obviously experienced this many times over in the different businesses that you've started and worked on and all the rest, but you are working on one single project and all of a sudden 10 minutes later, you're working on something completely different. So you could be dealing with somebody in HR and then it's over to an interview and then it's straight over to an Excel spreadsheet. Then it's over to the investment team, all in the space of 25 minutes. And yeah, sort of the ability to jump between different projects becomes like your superpower for that period of time. So I do miss deep work, as I'm sure, to a certain extent you do. And I think that's one of the things I want to focus on improving over the next while.
Yeah. I saw you were the first person to send a voice message on WhatsApp. Is there a story behind that worth telling?
I don't know if it's a story worth telling, but I'll definitely tell it. I mean,
Yeah.
I don't think I was the first person ever, certainly the first person in South Africa.
Mm-hmm.
So I landed up doing, it was sort of like a third year dissertation at university on Facebook's marketing tactics. I got invited to sort of speak with the VP of marketing at Facebook at that point in time. And it was just fantastic, like an awesome experience. I got completely carried away with what Instagram actually only recently launched, because this was just around the acquisition of Instagram. And I was talking about sort of how Instagram was going to have this sales feature where you'd be able to essentially post something, whether it's the scarf that I'm wearing or whatever it may be, and you'd be able to link that to the site and then get a little referral every single time somebody purchased it. And I thought this was the coolest thing. And then it went into also, well, now they've just acquired WhatsApp. Great. Like, what is the sort of monetization strategy around that? Because WhatsApp wasn't monetized. And it was the idea that Facebook could listen to what you were saying and therefore improve its marketing, right? Which it did early on. And I kind of was like, well, I kind of am one of these contrarians where I do believe that getting data about you can be beneficial. Obviously, if it's handled in the right way, definitely a controversial thing to say when you say Facebook and data in the same sentence. But I actually think like more times than not, I look at whatever ads I'm served on, say, Instagram, and like, I kind of like the stuff. And I read a book called The Reputation Economy, which sort of supported that narrative and how brands in the future, and maybe this is happening now, if they see that you're brand loyal and they're able to maybe determine that from Facebook, they'll give you greater discounts and a whole bunch of other things. So I started to lean into that a bit more. And then this voice notes thing really started to become like a bigger part of what I was doing. So I was like communicating with everyone by a voice note rather than a call. And next second, like everyone was just like, what is this weird guy doing? He's constantly sending us these weird voicemail things. And like, they're just eating up our data and it's annoying. And I did that for such a long time, also because I wanted to improve sort of my speech. I wanted to be a better oration individual, right? I wanted to like speak better. And that was like something else that I was focusing on at the same time, which is quite fascinating. So yeah, I guess long story short, I was doing that for ages, and a lot of people got annoyed with me, and it became something I was known for.
Do you still do that today?
I still send so many voice notes. Like, no, it doesn't end.
Yeah. Yeah, I don't love them. I have a mixed relationship with voice notes because they take up more time to listen to than they would if it was just text. So they need like a voice note with an optional transcription, like they have in voicemail.
Facebook, are you listening?
Yeah. Well, they probably are. Did they actually confirm that they would listen to people's voice notes and transcribe what they're saying and use that for marketing?
No,
or is that?
I don't think they confirmed that, but I'm pretty sure that they did that early on.
Yeah, because the CEO of WhatsApp, I mean, he made a lot of billions of dollars when they sold, and he was pretty like fuck Facebook mentality when he left, which is, I mean, he left billions of dollars on the table too, because I don't think it was fully vested. So I have to imagine what would they be doing inside of Facebook for him to have that kind of reaction? And it's like, well, that would be one of them. Just monitor everyone's communication and then put ads on top of the experience. It's like, that's brutal.
You can also have encrypted messaging, right? But I mean, hey, listen, somebody's got to process this voice communication at some point in time.
Yeah.
So, I mean, is that encrypted the same way? Is this a beta or an alpha or some sort of a product launch? Do we need to maybe have a walled garden for that? So there's all these weird things. I mean, I'm almost sure at some point in time they did that.
Yeah. But I don't think today it's monetized. I mean, I think it's just a giant hole in their balance sheet that they bought this thing. And like, I'm not sure. It doesn't seem like a good investment to me in hindsight. Whereas Instagram seems like
I think
the genius
effect. Yeah.
Maybe that's how
it's just that, to be honest with you. And it might even be WhatsApp for Business. I actually don't know if they've monetized WhatsApp for Business, but it potentially could be some things down the line there.
Yeah. What do you think is the thing that helps South Africa pull out of the I don't know if you'd call it a slump or a continual economic challenge? Like we talked about regulation. Are there other things? I mean, having a 36% or 50% unemployment rate, these things are massively existentially high risk. Like certainly when you throw in currency or some bad policies on regulatory issues, like Sri Lanka just comes to mind in a recent country that went through absolute chaos. How do you see the trajectory of South Africa? Do you see any like central things that people should pay attention to for other people listening that may live in South Africa or be interested in it?
Yeah, so I think if you're looking for innovation, this is not the market where you're going to see it. You just don't have forward thinkers or policymakers in the country that promote that. If you're looking for innovation, you'll go to many places in the US, you'll go to Europe. Obviously, Asia is a big player now as well. But unfortunately, I just don't think you're seeing that, not in South Africa. And it's sad to say that, but I think that is the honest truth, just where we are. And if I'm also being honest, I think just around sort of South Africa's trajectory over the last 15 to 20 years, you've really just had the slow puncture. And at times it seemed like a faster puncture, but ultimately you've just had the economy get slightly worse, slightly worse. You've had corruption scandal after corruption scandal. I mean, there's such a big cleanup job required and a systemic cleanup job required, not just with politicians, but also just with sort of the government systems. And I mean, you're still dealing in many areas with like book-based systems, like the most analog of analog systems that could never work in an efficient society. And unfortunately, we just have a lot of that. And you also have a population that don't have a lot of money. I mean, another interesting fact is you have more people in South Africa, and I'm not too sure how many other countries have this, but more people from a just numeric basis that are collecting grants from the government on a monthly basis. So like a government payout grant, then paying tax.
Wow.
And I don't know the exact figures, but I think there's in South Africa probably about 8.5 million taxpayers. I think there's 13 million people collecting grants. So it is, I mean, not just a small difference, it's a huge, huge difference. And it's that sort of a structure which you go, well, that's not sustainable. You can't keep that. And what's ultimately happening, and I think this is the biggest problem and it needs to be addressed. This is probably the first thing that needs to be addressed. But in order to address this, you have to address all the other issues, is the brain drain that happens. Because just like, I've spoken many a time about how many smart people are entering the crypto space, from finance and from, software development and all the rest. You're just seeing the exact opposite in the South African realm, where you've got loads of really smart people that are being educated here and or just going overseas and going to the likes of the US and going to Australia, Canada, and the UK. So yeah, I think that's the one thing that you have to change.
Yeah.
And that's the most important thing you can change.
Yeah, totally. I mean, if there's any singular goal, it's like driven people create great economies. It's like at the end of the day, it's hard to debate with that. Are the tax rates super high for people who do pay tax?
They are comparable to the United Kingdom.
Yeah.
So I think high for US standards, definitely. If you're in the top tax bracket, you're looking at 45%.
Yeah.
If you are in sort of a bottom tax bracket, you're at 18%.
Wow. Yeah. That's still pretty high. Interesting. I love talking to you because it's a unique perspective to hear you working in crypto in South Africa. I don't think I've had that combination before. I don't think I've talked to anyone located in South Africa. I've talked to people who used to live there. Elon Musk famously, right? Born there or from there at least.
Yeah. Yeah.
Yeah. Sweet, man. Well, congrats on all the progress. Are you guys currently fundraising or looking for anything you want to throw out there?
Yeah, we are. We are doing a bridge round. We're raising $4 million now. This is more for us to finish up a couple of big developments that we have on the go and actually to launch in the UAE.
Yeah.
So operating in the crypto space, you mentioned Celsius not long ago. I mean, fortunately, they didn't have any impact on us, but they did have a big impact on the ecosystem. And we also just don't know where the economy is going to go. So it's my job to be prudent and to look out, 12, 18, 24 months and make sure that we've got consistent runway and we're able to grow. I think we've got pretty big ambitions. Africa, the UAE, like those are big markets. There are markets that are growing fast. There are actually other African countries which you're seeing significantly higher growth rates than what you're seeing in South Africa. And we want to be able to tap into those.
Yeah.
So yeah, if you want to reach out to me to chat about the raise, please do. Would be more than happy to chat about it. We're closing that at the end of October this year. And we've got a decent amount committed. About 25% of the raise is already taken up. And we've just started. So.
And are you active on Twitter? Are you writing anywhere publicly?
No, I am not that active on social media anymore. I suppose on LinkedIn a little bit. But that's one of the things I want to focus on again, because I kind of went completely cold across all social media. I was just like, I'm focusing on this business. I'm making this thing a success. And I'm kind of peeking my head up now being like, okay, real world, I'm back.
Yeah. Last question for you. Are there any books or people, YouTube channels, podcasts, things that you've really focused in on and learned a lot from recently?
Oh my word. So many. So I recently read Anti-Fragile from Nassim Taleb. That was really great. I mean, in terms of podcasts, I'm looking down now, How I Built This. I think that's like one of those stables. In Good Company. That's with the Norwegian Sovereign Wealth Fund's CEO and founder, not founder, I suppose, just CEO and fund manager, which is an absolutely brilliant podcast. He talks to essentially all of the top Fortune 500 odd companies, their CEOs, their CFOs, and learns about business there. Other great business books, I mean, Blink from Malcolm Gladwell, it's another sort of favorite of mine. Gosh, I could actually go on for a while, but I mean, those are probably the key ones to take a look at. And yeah.
Nice, man.
It's good speaking with you as well, Mike.
Yeah. Thanks, Sean. This was fun. Congrats on everything and keep crushing.
Thank you. I appreciate it. Have a good rest of the day.